Riders. So what are riders? Riders are just stipulations that are added to policies to make them more valuable. Okay. There's some riders that cost money, no additional premium. There are some riders that just come built in and there are no additional premiums. For instance, with this PlanRight product, on all the plans, you're going to have something called the common carrier accidental death rider. Basically, it's just going to pay double the policy, the death benefit, if the client passes away, if they're on a boat, on a bus, on a plane, on a train. Okay, if they're on any of these common carriers, okay, and they bought a ticket to be on there and they pass away on there, then the beneficiary will get paid double. Accelerated death benefit rider or terminal illness rider, okay, is only on the preferred and standard plans, not on the basic, and it's going to pay the beneficiary, or it can pay the client, or it can pay the beneficiary in life if the client has a terminal illness. So let's say, God forbid, the client gets, cancer and gives them 6 months to live. Well, the client can choose to cash out a percentage of their death benefit. I believe is up to 95% in life, so they can do whatever they want with their money. The last rider, that's no additional premium. So these come built into the plans. And this one is with all plans. And it's a family health benefit rider. And this is just if like the family of the client, if they go to the hospital, if they need a surgery, things of that sort, this plan pays out certain cash amounts for these things to kind of help the client, be there for that family member. Okay. Later on, I will show you where you can go to find out more about these riders on our agent portal, and you can read of how these benefits pay out. It's a huge structure. There's a maximum benefit amount, so you guys can look at that on your own and see, and it's a valuable tool, right? So all these riders, I like to explain them because they're valuable tools. It's easy to go in front of a client and say, hey, you know what? If you die, we pay you this. What other things does this plan offer me that the other guy doesn't? So these are it, right? These are the hooks, right? These are the things that you're going to use to kind of make your clients see the real value in enrolling them into a PlanRight, Forester's plan. Okay. Now for an additional premium, you could also get an accidental death rider. And remember, this is only on the preferred plan. Okay. And this rider, same as the common carrier death, accidental death rider, is going to pay double the death benefit if the client passes away for an accidental reason. Okay, client walks outside, sips on a banana peel, falls on their head, they die, they're going to get double the policy. So if they chose $10,000 to be their death benefit, they're going to get $20,000. Okay. Now, our sales focus. So who is our client, right? Older individuals that are looking for affordable coverage that will help their family and loved ones with the individual's final expense. These individuals are on a tight budget and have limited financial resources. They need insurance designed to cover the bills after death and need plans that are readily available and pay benefits quickly. And that is done through the PlanRight because of the application questions, right? And because of the optical call. Basically, all the underwriting is done upfront. So God forbid, when the client passes away and the beneficiary is in most need of that money, they're going to get that money quickly, simply and quickly. There's not going to be no hassle about they having to check of what. No, it's already been done. They've already been approved. This money will issue or distribute almost immediately, 24 to 48 hours after presenting the death certificate. Okay, so that's what our real sales focus is, right? Let's go ahead now and let's run some quotes. Okay, the best way to run a quote, and we're gonna stop the share real quick, and we're gonna start a share real quick, and let's see where I have this. I think I have it here. We're gonna go to Forrester's Quotes.com. All right. Now I like to, on my cell phone, on my search, on my Chrome, whatever it is, whatever kind of phone, Safari, if you're using an iPhone, okay, you're going to type this in, right, to your search bar. And this same picture, the same thing is going to pop up, and you can save it onto your phone. So you can basically have this on your phone. You don't need to type anything in. You could just hit the button and it'll take you straight here. Once you're here, if you're doing other Forrester's products, you're going to have them all right here. As you can see, the Advantage Plus, which is the whole life, the Your Term, Strong Foundation, Accidental Death, all the plans are on here, right? Today, we're just going to look at the PlanRight. We're going to click on PlanRight. And once that we click on that, this opens up, and basically you're going to select your state. Florida, let's leave it at 55 for now. Let's leave it at male for now. Let's leave it at non-tobacco. Let's say the client wants to choose $20,000. We would type it in here. Or let's say the client says, hey man, I'm on a fixed income. I could only spend $50 a month. Then we can put that here, the premium amount, okay? So you have two options on how to see what best fits the client's needs. If they say 20,000, you know, then we go here. The riders are gonna be right down here. This is the accidental death rider. Okay, it's the only one that's gonna come with an additional premium. And let's not click it for now because I want you guys to see the price difference. Okay, and then we're gonna go to get a quote. And there's the quote. Okay, so for the preferred $20,000, it's gonna be $70 a month, $70.58. For the standard, it's gonna be $115. Remember, the preferred is that they answered no, so they're healthy. For the standard, they answer yes to some other questions on the application, so they're a little less healthy or more at risk, right? For the financial institution, which is foresters, so they're going to charge a little bit more a month. But the great thing about this is that the client is going to have the beneficiary is going to have that death benefit available to them from day one. And because we chose $20,000, and remember the limit for the basic is 15, then if they type coverage basic, they won't qualify right now, right? Because it's only up to 15 as it says here. If we go to display GCV, we're going to see the guaranteed cash value and the reduced paid up premium, which I'm going to tell you something about right now. So if it's for preferred, standard is right next to it. After year 5, they're going to have a cash value of $1,128 and so on and so forth. Okay. At age 65, it's going to drop, and further, it's going to drop to $3,208. Okay, so they can borrow against this money, right? After year 5, they can borrow up to $1,128. They will have to pay that little by little with a small interest. If not, like I mentioned before, if they pass away before paying that back, the death benefit, so the $20,000, they would subtract $1,000 and pay the beneficiary the difference. Okay. And now the reduced paid up amount is it's important. Okay. So what is that, right? So basically at the end of year 5, your client says to foresters, hey, you know what? I can't pay that $70 anymore, right? $70.58. You know, I don't want to lose the policy. So whatever I've paid up to now, how much would a death benefit be up to now? Well, foresters will turn to them and say, hey, you know what? You're in year 5, then your reduced paid up death benefit amount will be $3,090. So instead of the beneficiary receiving the $20,000, the client stops paying now for the policy, but they do have a policy for $3,000, $3,000 plus, right? So the beneficiary will receive that. If it's after year 10, it'll be $7,000. If it's after year 15, it'll be $10,000 and change, 20, 13,000. At age 65, it drops back down to $7,375. And the same applies here, but this is for the standard product. Okay. Now let's go back to the main menu. So just keep that in mind that the preferred was $70.58 for this amount, right? For a male this age that doesn't smoke. Now, what happens if I add that accidental death benefit rider? Well, now look at this. It'll be $74.52. So it went up about $4 a month. But guess what? If the client passes away because of an accident, their death benefit is now not only $20,000, it will be $40,000. So it's an additional extra coverage, right? For a little bit more a month. I personally add that on to all my policies. Do I explain it to my clients, the difference? Absolutely, I do. But, you know, it's kind of like a no-brainer to add this. And guys, I suggest you go on here, you save it on your phone, and you play with this, you know, put age 62, you know, or 63, put female, you know, put non-tobacco and then put tobacco, you know, put $10,000, you know, or let's put a monthly premium of $50, and let's take away the accidental death and let's get a quote, you know. So look at this, tobacco, age 63, a female, she just wants to pay $50 a month. Great. If she's preferred, she'll have a death benefit of $8,000. If it's standard, it's $6,000. If it's basic, it's $5,000. So play with this, guys. Go on here, look at this, and then play with it and see how it works. See how it works for you, and see how you can get benefits for your clients. Okay. I also want to go to the application itself, because I want to show you guys, the most important part of the application, which is going to be those underwriting questions. Okay. And and this is your basic application. As I mentioned before, all the optical information is on here. It's right here in the middle of the page, as you can see. Okay. The hours of operation and all that other good stuff. All right. Also, if you need help from foresters, the foresters number is here as well. Okay. It's also on top here. It also gives you a fax number. So when you submit the application, it also gives you things, like little tidbits for you to avoid delays on getting it issued, kind of stuff to get ready for the process of submitting an application. Okay. And the first part is going to be like, all the general information. Okay. All the general information. And here it's where the question starts, part 2. And it tells you really simple. Okay. If yes answers to 1 through 6, the proposed insured is not eligible for Forester's PlanRight. So do not complete or submit this application. So you're going in, you're talking to the client, they love the price, they say, hey, I'm super healthy, I think I'm going to be preferred. So to start answering the questions, and they get on here and they're like, oh yeah, I do live at a skilled nursing facility. They're not going to qualify. You're going to tell them, ma'am, sir, we're going to have to look at another product for you. Let's go through these questions just to see where we're at. And so the next product I look at, I can be more clear on what we're going with. But you know what? This won't be for you. You don't have to make an optical call. You don't have to submit this, okay? You just rip it up, or you can hold it as for the client's information, okay, to search other products for them, other carriers, okay? But you don't have to submit it. The only time you do submit it is if the client tells you no to all of these, and then you get to the second set of questions, and it'll tell you here, complete questions 7 through 12, and if the client answers yes to any questions, okay, to any of the conditions. Sorry. So it tells you here in the bottom here, if the client answers yes to any of the questions 7 to 12, remember they're going to qualify for the basic. Okay. If they answer no, then we proceed to questions 13 to 15. Okay. You will still proceed if they answer yes, and you will still they will still have to answer these questions. But remember, once they answer yes to this, they're going straight to a basic. Okay. They are at a higher risk for the company. So the company has to make sure that they're in the type of coverage they belong in. Okay. And now if they answer yes to any of these, they're going to go to standard, as it says down here. Now, if they answer no, then it's preferred. Okay. So you make your call. So you check here, right? Oh yeah, they answer no to everything. I'm putting them on the preferred. This is how much they're going to pay a month this is how much they're going to be insured a month. They want the accidental death rider. This is how much their premium is going to be. Okay, you put all that information, you make your call to optical. You finish filling out the application, you get all their checking, their routing, you answer all these other questions that are here. You sign, they sign. Who's going to be the owner? Who's going to be the payer? Who's going to be the beneficiary? The contingent beneficiary. You answer the rest of these questions if they're using the dual medication. If yes, those are medications that basically can be used for different things. You want to be really clear with that if they are, because certain things are, like, let's say, used for asthma. They could also be used for COPD. COPD being a more serious illness of the lungs or the respiratory system than asthma is. So you want to make sure that at the end of the application, you identify that it was a dual, and you write it here in the remarks, right? And it was a dual medication they use, and they use it only for asthma, and it's controlled and whatnot, right? So, the application process, or them being approved process, is simpler. It's a lot simpler, okay? So you finish filling this out, you get in the application, the optical call, sorry. And, during the optical call, they say, hey, yeah, answer no to everything. The optical interviewer says, hey, you know what, let me put you on hold. And then they come back and they say, hey, we don't think the client answered truthfully to questions between 13 and 15. They're going to qualify for a standard. They qualify for a standard instead of a preferred. So you're going to whip out your phone. You're going to go to the quoting software. You're going to hang up the phone with the optical person. You're going to tell the client, hey, look, you know what? they did a review. It seems like, there's some discrepancy or something that was answered erroneous between questions 13 and 15. You qualify for a standard. This is the monthly premium. Are you all right with that monthly premium? They say, yeah, you know what? Put me on. I need the insurance. You're going to scratch out the premium amount. You're going to scratch out the date that you marked the preferred, this box. Okay. You're going to initial it. The client's going to initial it. Then you're going to go and you're going to mark this one. Okay. You're going to put the new amount. Remember the accidental death rider. It's only for preferred. So you're going to scratch that out. You're going to initial it. Anything you scratch out on the application, you and the client have to initial it. Okay. And you're going to submit the application as is to foresters. Okay. There is no, hey, so now you qualify for a standard. Let's rip this baby up and let's make a new one. Nope, you can't do that. Optical will tell foresters that in the beginning, you said the client was qualifying, or the client answered no to all the questions, and you were looking for the type of coverage to be preferred. And that because of what they found during the optical call, they said that they could be standard. So foresters is going to be looking for an application that has these, scratch outs, whatever you want to call them, these changes, right? Okay. And it must be submitted that way. It's very important. Okay. A couple of things also I want to touch base with on this application. Remember, there's going to be a proposed insured, an owner who owns the policy, right? And then another. If somebody's going to be like a payee or anything like that, you want to check on here who the payer is going to be. Okay. Usually it's the proposed insured. And then what is the first premium going to be? Okay. And it's either going to be by check. You're going to send a check, void a check with this, or you're going to fill out this part, which is the pre-authorized check. And then subsequent premiums, you can either check here direct bill or keep it on the information you put on here. So I would suggest just keep it on there, monthly, quarterly. And here's the part where it tells you, when you want those draft dates to occur and things of that sort. All the information goes on here. You print the name, you sign the name, you finish answering these questions. Anything that, remember that we're not here to change people out from their insurance plan. We're adding a benefit with this one. So if they are looking, to reduce a price on their premium of their current insurance, and they find out that this is a better product for a lesser price, I would still answer no to all of these because of the fact that they're just going to, it's just going to hinder the process of getting them, approved. Just answer no to all of these. And then once this becomes, I tell them, don't cancel your other policy yet. Once the certificate is effective, one day it's drafted that first month, then we go ahead and we call up that other company and you can help them with that process and cancel that application. If there's an owner, somebody that's going to pay and it's the owner of the policy, different from the insured, different from the contingent or from the beneficiaries, they'll fill out their information here. And here's where the beneficiary contingent information is. Again, we went over here, the dual medication. Signing of the policies, okay, the proposed insured. If the owner is different, they're going to sign here. You're going to put your information down here. And this is kind of like a receipt. You can leave it with them. You can fill out and leave it with them. And the last part is going to be this producer report. You don't have to do this with the client. You can do this once you get home. Simple questions, answer truthfully. I always say, okay, when you start this PHI phone call, that interviewer is going to give you a reference ID number. Just put it here in slot number 6. Continue answering these questions, make your remarks, and that's it. Remember, this application is also available online. I'm going to show you how to print it in paper. You can also do it online. You can go to your agent portal, go to the PlanRight, and you can print out this application. You can have it, or you can also do this online, right? And I'm going to show you how that's done right now. We also spoke about the medical bill chart. Take a picture of this. You'll also have access to this on your agent portal, but it's just very basic, right? So if they're this height, if they're this height and this weight, they qualify for the plan. Okay, anything above this weight, they won't qualify for that type of coverage. So on and so forth, all the way to the bottom here. Okay.